Ryan Weaver wrote an article in the Globe and Mail, it was an article about some of the challenges that businesses face, and that owners had listed access to financing as one of their biggest concerns facing the future of their business. And in our experience, I'd have to say we agree. We see that many businesses are good businesses, but because of how the banks operate, they're not really able to get the money that they need. And in fact, it's one of the things that causes us the greatest amount of frustration in certainly my 18 years of doing this, but more importantly through EmilyNow.ca. We see requests come in, we'll score them properly, we'll help get them in front of the right bank, but man, it can be difficult trying to get those banks to issue term sheets or commitment letters. Some of the classic examples we see, of course, are that there are businesses in markets that the banks just don't like. Hospitality might be one of them, or transportation might be another. But these businesses are good businesses, and so because the banks won't help them, these businesses end up going and getting, say, mid-market financing or private financing at higher interest rates, and then they go back to the bank to say, look, we've been paying these higher interest rates for a couple of years. Can you give us a loan so we can at least begin saving interest? I mean, if we've been able to afford higher interest rates, certainly we can afford yours. But the banks don't look at it. Generally speaking, banks don't tend to look at it that way. They really just get stuck on, is that a market that we want? Is that the kind of client that we want? Maybe we don't like the ratios that we're seeing, and so they find a way to either delay giving an approval on the deal, or they just find a way to not do it. And there seems to kind of just be this cycle where these good businesses come through, and if they could just get access to really good financing, they certainly could grow, employ more people, help the economy, etc. But that's still kind of hard. And so when we read this article, we had to agree with Ryan that that certainly is something that we see on our side. And I think the reasons for it are because common sense, it's hard to computerize or systematize or build a software program for common sense. I mean, can you imagine if we could do that? But not only is it hard to computerize common sense and put it into some sort of credit matrix, but the personalities and the dedication of the owners are also something that doesn't translate into a financial worksheet very well. And over 18 years, I'm familiar with dozens and dozens of entrepreneurs that have survived some economic turbulence. They've survived losing big customers and replacing them with new ones. But unfortunately, the lending world doesn't have a way to put that in a box somewhere. And so anyway, we hope in some little way that we are helping to change that with EmilyNow.ca, our online platform. But we agree with Ryan that, yeah, it's pretty tough to get financing, and we can see why businesses continue to list access to financing as one of their biggest concerns about going forward. So on that note, if you are a business owner and you're concerned about financing, you want to maybe get ahead of an impeding problem that you see, or get yourself out of a problem that you're currently in, or take advantage of some new opportunity that requires capital, I'd encourage you to visit EmilyNow.ca, stick in the loan amount or the financing amount that you think you need. You can kind of go through the rest of the tools, and in less than 5 minutes you should be able to see what your options are